Hello, my name is Steve Bigelow with the Candlestick Forum. We're going to look at the market direction for April 20th, 2020. The market continued to waffle on its uptrend. The Dow was down 600 points today. However, it's still above the T-line. This is the important factor, that as long as we stay above the T-line, we have to assume we're still in an uptrend. Additionally, the Nasdaq, even though it traded a little bit lower today, is still trading above the 3T line. However, it would not be unusual to see that once they broke through the resistance level of the 200 and the 50-day moving average on the Nasdaq, that it comes back for a couple of days to test it to see if it's going to act as support. So it doesn't matter which way the market is moving. In our scans before, look at Roku breaking out of a fry pan bottom, still trading positive on the day. Now remember, coming out of a fry pan bottom has expectations that this trend right here is going to be fairly strong. Same thing with our recommendation on Marna. Look how it broke out of this slow curve, breakout of a wedge resistance level. Even today, it was trading up positive when the market was trading off, which is a characteristic of individual pattern breakouts. That this is a brand new strength in investor sentiment, and it's usually going to run for a while. We recommended in our Sunday night stocks to watch for this week, Biotechs. We are buying PBYI, on positive trading because you had a fry pan bottom breakout where it closed right at the 50-day moving average. Made it very simple. If they started trading through that level, you wanted to be buying immediately because not only was it confirming your fry pan bottom, but it was telling you the 50-day moving average and the 200-day moving average was not acting as resistance anymore. Again, this is just a high probability setup in candlestick analysis because we know exactly what should happen coming out of a fry pan bottom. Same scenario over here on Clovis. We recommended last week because look at your doji sandwich, a bullish candle and a doji. We know the doji rule, which is the price will usually move in the direction of how they open after a doji. When it opened positive, it was telling us that the 50-day moving average was not acting as a resistance. Basically a T-line crunch bobble breakout, meaning it hit up here, bobbled back to the T-line, and now the T-line held the price up until it broke up through the breakout level, giving us the probabilities that there was a new investor dynamic in this price move. APLS we recommended once again based upon the doji sandwich breakout through the 50-day moving average after a T-line crunch coming out of a fry pan bottom, expecting more upside. CODEX was another recommendation late last week because look at the double doji. This is a very high probability trade setup. A bullish candle, a doji, a little pullback doji, and then a positive open told us two things. One, we were going to probably have a positive trading day. And two, that positive trading day was telling us that the wedge breakout was breaking out. We are now probably in another price move that could be the same magnitude as this over here. This is not rocket science. This is just common sense analysis of what the Japanese rice traders have illustrated for hundreds of years of what happens in normal human buying and selling habits. So look at LDOS for tomorrow. There's your slow curve fry pan bottom, a doji closing right on the 50-day moving average. If it opens positive after a little best friend's signal, doji gap up, opens positive from a doji sitting right smack dab on the 50, tells us they're going to trade positive, giving you a doji sandwich breakout or a high probability that the next wave is in progress. That'll be it. We'll hopefully see you in the chat rooms. We are going to be working this week on one of the strongest signals and candlestick analysis, which is the kicker signal. So would like to have you join us at the candlestickforum.com. Thank you for listening.